Welcome to the Deep Dive. Today we're getting into a really interesting move in the blockchain world. Dynamite Blockchain Corp.
Okay.
Just acquired Kaspa Secure Technologies Inc.
That's right. And we've got some good material to work with here. There's the official material change report from Dynamite, their own news release about the deal, and also several articles looking at Kaspa itself, the tech, price predictions, that sort of thing.
Exactly. So our mission today is pretty clear.
Yep.
Break down this acquisition. We want to understand the deal itself, what Kaspa Secure actually brings to the table technologically, and, what the feeling is out there about Kaspa's future. Let's just jump right in. Dynamite Blockchain, they trade on the CSE, ticker KAS, which, yes, is a bit confusing since that was Kaspa Secure's old ticker too, but we'll manage. They announced on May 13th, 2025 that they'd fully acquired Kaspa Secure. But this deal wasn't exactly sudden, was it? There was some history here.
No, not at all. The material change report actually flags the key date as May 12th, 2025, and it mentions an amended securities exchange agreement from that date, which is interesting because it replaced an agreement from just a few days earlier, May 9th, and that one replaced an original agreement going back to March 11th. So yeah, it took a few tries to get it finalized, it seems.
Okay, so a bit of back and forth. What did the final terms look like? What did Dynamite actually give up for Kaspa Secure?
So the final deal, according to the report in the news release, involved Dynamite issuing 80 million of its own common shares. That was in exchange for, all the outstanding shares of Kaspa Secure.
80 million shares. And they put a value on those.
They did, a deemed price of 0.06 cents per Dynamite share, which, if you do the math, puts the total deemed value of Kaspa Secure at $4.8 million.
Okay, $4.8 million. Now, I remember seeing something about the earlier agreement that value is lower, right? Significantly lower than what was maybe talked about back in March.
That's right. The news release points that out. The original agreement mentioned a deemed price of $0.10 per share. So yeah, dropping from $0.10 down to 60 and is a pretty substantial change in valuation.
Any idea why that might have happened? Market changes? Due diligence?
It could be any of those, really. The crypto market is volatile, so conditions definitely changed between March and May. Or maybe Dynamite found something during due diligence, or perhaps they just negotiated a better price. It's hard to say for sure from the outside.
Makes sense.
And there's another piece. Those 80 million shares Dynamite issued, they come with resale restrictions. The sellers can't just dump them immediately. The lockup lasts until the later of two dates, either 4 months and a day after issuance, or 10 trading days after Dynamite files combined financial statements that include Kaspa Secure.
Okay. So that signals some longer-term commitment from the Kaspa Secure side, do you think?
Usually, yeah. It suggests they believe in the combined company's future, or at least are willing to wait for a potentially more stable market window.
Now, Dynamite CEO Akshay Sood, he sounds quite bullish. Called it a huge win. He specifically mentioned it helping to ease onboarding into the Kaspa ecosystem. Why is that such a focus?
Well, this acquisition seems to be the cornerstone for Dynamite's new Kaspa Services division. They already had Kaspa Holdings and Mining and Kaspa Products divisions. This new services division, powered by what Kaspa Secure brings, looks aimed squarely at making it easier for users to actually use the Kaspa network. Sood's ambition to be a leading public Kaspa-focused company really underlines that strategy. They're betting big on the specific ecosystem.
And Kaspa Secure isn't just a shell company, they have actual tech. The press release mentions AI-driven biometric authentication and compliance tools integrated into something called the IME wallet.
Right. Kaspa Secure's whole game is security, compliance, and digital identity within blockchain. That's their specialty. The IME wallet is their platform, and it already supports over 1,200 different digital assets, which is quite broad. Adding AI biometrics, think fingerprint or Face ID for your crypto, is about making security easier, more user-friendly. And the compliance tools, those are likely aimed at navigating the often complex regulations in crypto, especially for businesses using Kaspa.
Okay, so it's about adding specific, useful tools to make Kaspa more attractive and usable. This brings us to the core question then. Why Kaspa? What's so special about its underlying technology that makes Dynamite want to build a whole company around it?
Yes. This is where it gets really fascinating. Kaspa's big claim is tackling the blockchain trilemma head-on, the challenge of balancing security, scalability, and decentralization.
Right, the classic trade-off. How does Kaspa approach it differently?
Their main innovation is using a block bag instead of a traditional blockchain. DAG stands for Directed Acyclic Graph.
Okay, BlockDAG. So visually, instead of a single chain of blocks, it's more like a web.
Kind of, yeah. Think of a blockchain like a single file line, one block after another. A block DAG is more like a network where multiple blocks can be created and confirmed at the same time. In parallel, they reference each other, forming that graph structure.
And the benefit of that parallel processing is speed.
Exactly. Speed and efficiency. Kaspa's network generates, get this, 10 blocks every second, 10 BPS. Compare that to Bitcoin's one block every 10 minutes or so.
Wow, okay. 10 blocks a second. So transactions must confirm much faster.
Dramatically faster. They claim transactions are confirmed in about 1 second and fully finalized on average in just 10 seconds. That Lakewood Scoop article we looked at specifically calls out this high TPS transactions per second compared to Bitcoin.
That's incredibly fast for a proof-of-work system. How do they maintain security and decentralization with that kind of speed? Isn't there a risk?
That's where their consensus protocol, GhostDAG, comes in. It's still proof of work, like Bitcoin, but GhostDAG is designed specifically for this DAG structure. It's described as a generalization of Bitcoin's Nakamoto consensus. The key is it allows the network to reliably order all those parallel blocks and agree on the transaction history, even without a single chain. They argue it maintains the same security guarantees as Nakamoto consensus.
Interesting. The materials also mentioned efficient proof of work and the heavy hash algorithm. Does that tie into energy use?
It does seem to. Heavy hash was apparently chosen because it's less energy intensive than some other algorithms and potentially suitable for future optical mining. Plus, because the block DAG doesn't waste blocks, unlike orphan blocks in Bitcoin, all the mining energy contributes directly to securing the network. The Lakewood Scoop piece also hinted at this potential for better energy efficiency.
You mentioned orphan blocks. So in Kaspa's DAG, if two miners find a block at roughly the same time, both blocks get included.
Essentially, yes. They both become part of the graph and contribute to the overall security and transaction record. No wasted effort, which is a big efficiency gain.
And this GhostDAG protocol, it assigns probabilities for block inclusion. Sounds complex.
It is quite sophisticated. It looks at the connections between blocks in the DAG. Blocks that are referenced by many other blocks are considered more likely to be part of the correct history. It uses these connections and probabilities to establish a secure order without needing that single linear chain.
Okay. What about the instant confirmations claim? Is it truly instant?
Well, instant is maybe a slight exaggeration, but it's extremely fast for crypto because blocks are created every second, your transaction gets included very quickly. And then subsequent blocks rapidly reference the block containing your transaction. Security increases with each confirmation, and you get a high level of security very, very quickly, much faster than waiting minutes on other chains.
And scalability, handling lots of users and transactions.
That parallel block processing is the key again. By not being limited to adding one block at a time, the network can inherently handle a much higher volume of transactions. This high throughput is a major selling point for a decentralized proof-of-work system.
So speed, security via GhostDAG, scalability via the block DAG, sounds promising. Kaspa itself isn't that old, right? Launched late 2021.
November 7th, 2021, yeah.
Was there anything unique about how they started, like the coin distribution?
Absolutely. They really lean into the idea of a fair launch. That means no pre-mine for developers, no ICO, no pre-sales to venture capitalists, no special coin allocations for anyone. All KAS coins came into existence through public mining from day one, very grassroots Nakamoto style. They also had a fast emission schedule initially, which helped distribute coins widely before specialized mining hardware, ASICs, could really take over.
Speaking of ASICs, the heavy hash algorithm is described as ASIC friendly. Doesn't that sometimes lead to centralization concerns?
It can, yeah. That's a common debate in proof of work. But Kaspa's argument is that their super high block rate actually helps smaller miners. The idea is, with blocks found every second, even miners with less hash power have a better statistical chance of finding some blocks over time. They also mentioned that the algorithm choice involved community input and was initially geared towards GPUs to ensure that wider distribution before ASICs arrived.
Interesting approach to managing that. I also saw they rewrote their core code in Rust. Why do that?
Performance, mostly. Rust is known for speed, safety, and handling multiple things at once efficiently concurrency. They moved from Go to Rust, apparently, to push performance further. Their long-term aim is supposedly reaching 100 blocks per second, which is ambitious. A Rust implementation could be key to achieving that on standard hardware.
And they're also thinking about data storage. Blockchains get huge over time.
Right, node storage is a big issue. Kaspa uses a few techniques. They have data pruning methods adapted for the DAG, something related to mining in logarithmic space, and ways to limit how much data each node needs to keep track of the current state. Crucially, they use cryptographic receipts so that even after old transaction data is pruned away, you can still prove those transactions happened indefinitely.
Okay, they seem to have put a lot of thought into the technical hurdles. Let's shift gears a bit to the market side. We have some price predictions from around late May 2025. What are they saying?
Well, you know how crypto predictions are. A bit all over the place. CoinStats was generally bullish for 2025. They saw a potential range between roughly $0.11 and 21 cents. They even threw out the possibility of hitting $0.50 and maybe getting past the old all-time high from August 2024. Their data snapshot from early May had Kaspa around 0.094 with decent volume and a market cap over $2.4 billion.
Okay, that's one perspective. What about CoinCodex? They often lean more on technical indicators.
CoinCodex, as of May 27th, was seeing a short-term downward trend. They predicted it might dip to around 0.082 TAS by early June. Their broader 2025 forecast was a range of maybe 0.073 to 0.1087, averaging around 0.083 cents. So more conservative, maybe even slightly bearish short-term, but interestingly, their overall sentiment was rated neutral, and the fear and greed index was high at 74, indicating greed in the general market mood.
So CoinStats bullish, CoinCodex more cautious, at least in the near term. Did the Liquid Scoop article offer any price thoughts?
Less specific predictions, more focusing on the fundamentals. They highlighted Kaspa's goal to fix scalability and speed issues, noted the higher TPS, potential energy efficiency. They basically said, look, price growth is speculative, but if this technology gets widely adopted, the potential for value increase is significant.
Right, so mixed signals on short-term price, but a consistent theme that the underlying tech is potentially very valuable.
Let's tie this back to the acquisition then. How does all this, the tech advantages, the market buzz, fit into Dynamite's strategy? It looks like Dynamite sees the unique potential in Kaspa's tech, the speed, the scalability. By buying Kaspa Secure, they're acquiring the tools, especially for security and compliance, to make that powerful tech more accessible and user-friendly. Establishing that dedicated Kaspa Services division seems key. They want to be the public company for investors wanting exposure to the Kaspa ecosystem, and maybe getting it at that lower $4.8 million valuation made it an even more attractive bet in the current market.
Okay, so let's try and sum up this deep dive. Dynamite Blockchain Corp buys Kaspa Secure Technologies. It's a strategic play to build out their Kaspa Services division. The core appeal is Kaspa's GhostDAG technology. It promises serious speed, scalability, and security improvements over traditional blockchains, using things like GhostDAG. Market predictions for the KAS coin are varied, some bullish, some cautious, but there's a sense that the tech itself is strong, and Dynamite is positioning itself to be a major player in bringing that tech to users.
That captures it pretty well, I think. And it leaves us with a final thought, really, for you listening. Given Kaspa's really different approach to solving these fundamental blockchain problems, and now with a company like Dynamite investing heavily to build services around it, what else could this technology unlock? We talked about fast transactions, but could it enable new things in digital identity, secure data handling, maybe completely new kinds of decentralized apps? What role might you play now that you understand a bit more about what's happening here? Definitely something to keep an eye on.